Welcome to the February meeting of the Secure the Village Financial Services Cybersecurity Roundtable. Glad you could be with us this morning. You all, I think, are familiar with Secure the Village and the Financial Services Cybersecurity Roundtable, but I'll just sort of give a brief recap. We started doing this, I want to say, gosh, what's Stan, about 5-6 years ago, I think, at least.
Longer. This group has been going on probably since 2014, 2013.
Yeah, okay, that sounds right.
I'll find out while you're doing this.
Okay.
I'll do some research.
We, came together because banks obviously are sort of at the nexus of, a lot of money in cybercrime. So you really, and as well, a lot of regulations around banks related to IT and information security. So we just felt that we would be better at what we do and more prepared if we had a forum to come together and share information about cybersecurity in the financial services arena in particular. We've had a variety of people join us over the years. Please spread the word. We're trying to really grow the organization now that we're doing this virtually, so there's no reason if you have colleagues in other areas that are geographically separate, let us know. We can put them on the mailing list. Anyway, I'm John Coleman, and I'm working for a firm called Audit One LLC. I'm senior associate. I was previously in bank, IT, and security senior management roles. And the co-host of the Financial Services Cybersecurity Roundtable meeting is Josh Peplow, so I'm going to have him say hello briefly here.
Morning, everyone. Josh Peplow with American Business Bank. Work in the Treasury Management Department. American Business Bank is a bank founded in 1998 that designed for middle market companies. And through Secure the Village, I've made, I've learned a lot from people like Stan and John, because I'm not on the technical side, I'm more on the customer facing side. But I've learned a lot from them and made great contacts. What I do in treasury management is we oversee online banking for about 1,700 online banking clients, which include things like ACH origination, wires, and part of that role is customer education and recovery efforts when we do have customers that have funds leave the bank. So through Secure the Village, we have made great contacts in law enforcement and other banks, and have been able to recover a lot of funds that otherwise we would not have been able to had we not had these connections through Secure the Village.
That's great. And, just Josh is in a really key position because, it's really the touch point with the customer, as he said. And most of what happens in banks is not internal, penetration or fraud cases. It really is the clients. And so Josh and the folks in his type of position are really constantly trying to work with clients to make them more secure. And both American Business Bank and the bank that previously I was with, along with Susan, I might add, our speaker, Grandpoint Bank, we conducted customer seminars about cybersecurity to try to help these small and medium-sized businesses with their understanding of information security and what they should be doing. So with that, I mentioned Susan. I'm going to turn it over to her. Stan will have some comments. Do you want to talk before Susan, Stan, or should we go right to Susan?
Yeah, just a few words, John.
Okay.
Again, yeah, Susan, again, thank you so much for being our presenter today. Totally looking forward to the money laundering side of this. And beyond that, what both John and Josh talked about is really the vision of Secure the Village, that it takes the village to secure the village. It takes all of us kind of working together. And what I'm really just blown away by is we get people talking together over common issues, and magic happens. And what do I mean by that? somebody will say, hey, I got a problem. How do you do this? And somebody else will say, oh, we had that same problem. Here's what we did. Or somebody will say, hey, I got a problem. How do we do this? And somebody else says, that's a good question. We have that same problem. How do we do this? And somebody else will say, well, we've got that problem too. And now we've got a task force that can go figure out that problem. Those are things that Secure the Village is like all about. So a couple of things, if you would all do in the chat box, a couple of things, just so we get everybody, we build community, put your name and email in the chat box. Also, one of the things we do regularly in all of our groups is organize what the networking world calls troikas, break people up into groups of 3 or 4 who then go off between meetings and just get together, get to know each other better, what matters to them, you know, both on the personal side and on the professional side, because we are both of those kinds of people. So if you want to be in a troika, put that in the chat box as well, and we'll assign you. Devin Terry, who's not here, she's our director of operations, goes through the process of connecting people up. If you've got questions, put them in the chat box, either for Susan or more generally for any of us, and we'll get to those later. And the same thing, if something Susan says or something somebody else says triggers a thought, or you know a reference that's associated with that thought, put it in the chat box. And with Zoom, we'll save the chat box and send it off to everybody, so everybody gets the benefit of, again, it takes a village to secure the village. So everybody will get the benefit of what we all know here. Other piece of it, go to our new website when you get a chance. You're all cyber leaders. Sign up on the website as such. We've got, maybe I'll show some of this after Susan's talk, take you through a tour of the new website, because A, there's a ton of information there. B, we want to get even more information, and all of you can provide references that we can then hook into our library that way. So anybody wanting to kind of get an overview of a piece of security, our vision is that our website provides that capability. So thank you all for being part of this. And with that, I'm going to turn it back to you, John, and take it away. And Susan, again, thank you for being part of today.
Great. And Stan, before I proceed and turn it over to Susan, for those people that might view this afterwards online, what email address should they contact Secure the Village with to get added to the mailing list?
Good question. Good way to say that. So yes, you can contact us, Stan at securethevillage.org, gets to me directly. Beyond that, we're recording this. We'll have this available, I'm going to say probably by Monday. There's a chance it'll take us a day or two later. And we'll promote that on LinkedIn. Devin's good at when it goes live, there'll be a LinkedIn post to that. That's another thing, follow us on LinkedIn. We've got a group there as well. And if you can't find it or you don't know where it is or whatever, shoot me an email and I'll send you a link to the recording.
Great. All right. So I've known Susan since 2012. We worked together at Grandpoint Bank. Susan was the chief risk officer there. Her background is pretty amazing. I'm going to let her describe it in more detail. But, you know, Susan and I partnered on all of the compliance requirements related to cybersecurity and incident response. She's really qualified, and she recently just switched from one bank to another and is working now with the people that started Grandpoint Bank. So it's come full circle for her. Susan, take it away.
Thank you, John. Good morning, everyone. So a little bit about me. As John said, we worked together at Grandpoint Bank from 2012 until 2018 when the bank was sold, and then everybody sort of went their own way. At Grandpoint, I was the chief risk officer, so I did have, in addition to compliance and BSA and audit, information security and cyber risk reported to me. When the bank was smaller, you know, John, as our chief IT officer, handled both IT and cyber risk, but then we got to a point where we needed to split that off, and then that piece reported up to me. Prior to that, I started my career as a regulator. I worked for the FDIC as a safety and soundness examiner for 13 years. I left the FDIC in 2006, and from then I held various positions at different LA area banks as either chief risk officer, BSA officer. As of 2 weeks ago, I did leave the bank that I think was on my profile for this announcement. And I did join the group that started Grandpoint Bank, and we're sort of doing it all over again. We are scheduled to close a deal on a bank acquisition in 2 weeks, and you know, get the bank charter and then start M&A activity. So that's sort of exciting. So that's my background. Today, we're gonna do something a little different. It's not cybersecurity focused, it's more money laundering and other COVID fraud cases. But there was an advisory that was put out by FinCEN related to some of the cyber fraud that have emerged because of the pandemic. So we'll go over that. So we'll get started. And you all can see my screen? Okay, super. So we're gonna go over some FinCEN advisories alerting financial institutions to various pandemic-related fraud schemes. There have been several that have been put out. We're gonna just highlight 3 of them. But feel free to visit the FinCEN website to download and read some of the other advisories, and that's fincen.gov. Then we're gonna look at some real life COVID-19 case studies and some SARS related to that. And then we're gonna close by looking at what are the current regulatory expectations, which largely have not changed. So this basically, I'm not sure how I can, okay. This is just our introduction. So many illicit actors are engaged in fraudulent schemes that exploit vulnerabilities created by the pandemic. FinCEN has issued several recent advisories to alert financial institutions to various fraud schemes observed during the COVID-19 pandemic. Other illicit actors are using the pandemic to explain certain anomalous fluctuations in account activity. This presentation will review FinCEN's recent advisories and cover some real life case studies. We will conclude with a review of current regulatory expectations. So these are the 3 advisories that we're gonna go over today, and they were issued because of the pandemic. The first one, May 18th, related to medical scams related to the COVID-19. Then in July, FinCEN issued imposter scams and money mule schemes related to COVID-19. And then at the end of July, they issued cybercrime and cyber-enabled crime exploiting the COVID-19 pandemic. So the first one we'll look at is the medical scams. Basically, that was the first of several advisories that FinCEN issued and continues to issue, actually. It alerted financial institutions to schemes that are related to cures, tests, vaccines, and other associated services being offered to the public. And as we've seen with other disasters, floods, other natural disasters, illicit actors take advantage of these incidents and prey on victims. So these are what we're starting to see. They claim that purported vaccines or cures for COVID-19 and products, and they just basically prey on people's fears and vulnerabilities. So some of the things that we saw, and FinCEN is alerting financial institutions on, is illicit actors selling fraudulent or unauthorized at-home COVID-19 kits and related medical scams, and of course, running those transactions through a financial institution. Deeply discounted or highly inflated prices on sought after goods. We're gonna look at a case study related to that. Requesting payments in unusual types of transactions, such as prepaid card, use of MSBs, money service businesses, and convertible virtual currency. The goal here is to avoid a financial institution because they are aware financial institutions have monitoring systems in place and could potentially detect these transactions. And patterns of high chargebacks and return rates. These are some of the red flag indicators. Another scheme within here is the non-delivery scams. So basically here, the merchant, some of the red flags to look out for is a merchant with no lengthy history or business operations, lacks physical presence or address, and lacks a tax ID number. Noticeable discrepancies between address and a public record search, multiple businesses at the same address. This has been found to be a common red flag. And merchants cannot explain or provide source of goods. Who are their suppliers? The third scheme is price gouging and hoarding of medical related items, market manipulation, hoarding, and price gouging. That's unfortunate, but we have seen those. Surplus items or newly acquired bulk shipments of goods such as masks, gloves, alcohol, disinfectants, etc. And the purpose of accumulating unreasonable amount of any of these medical related items for personal use or accumulating those products for selling at higher than market prices. So those were some of the red flags, and there are many more identified in FinCEN's advisory related to the medical fraud scams. So I encourage you to download those from FinCEN's website and take a look at them.
Yeah, and we can post those on our website as well, Susan.
Sure.
Those links. Yeah.
Okay. Yeah, I'll send you the links. So that was the first advisory that FinCEN issued as a result of the pandemic, and that was issued on May 18th. Then on July 7th, FinCEN issued an advisory on imposter scams and money mule schemes, again, related to the COVID-19. So imposter scams, basically, in imposter scams, criminals impersonate organizations such as government agencies, nonprofit groups, universities, or charities to offer fraudulent services or otherwise defraud victims. Basic methodology of an imposter scam. The imposters contact a target under the false pretense of representing an organization and then coerce or convince the target to provide funds or valuable information, engage in behavior that causes the target's computer to be infected with malware or speed of disinformation. So what is the role of a money mule? A money mule, essentially, and we've seen it in other money laundering cases, is a person who transfers illegally acquired money on behalf of or at the direction of another. That is the money mule. How does a person become a money mule? We talked about, the imposters contacting victims. So a lot of times the money mule will begin as a victim of a scam, particularly a romance scam or a lottery scam. Or sometimes there are job posts online or social media, and they promise easy pay for little effort, like the work at home type of scenarios. Or they can be recruited by fraudsters to facilitate the scheme, just upright recruitment. During the COVID-19 pandemic, US authorities have detected recruiters using money mule schemes such as Good Samaritan, romance, and work from home schemes. US authorities also have identified criminals using money mules to exploit unemployment insurance programs during the COVID-19 pandemic. Okay, there are 3 types of money mules. The least egregious, I would say, is the unwitting or unknowing money mule. And this is an individual who is unaware that he or she is part of a larger scheme. The individual is simply motivated by his or her trust in the actual romance, job, or proposition. So that's the unwitting money mule. The witting money mule is an individual who chooses to ignore obvious red flags or acts willfully blind to his or her money movement activity. This individual is motivated by financial gain or an unwillingness to acknowledge his or her role. And finally, the complicit money mule is an individual who is aware of his or her role as a money mule and is complicit in the larger criminal scheme. This individual is motivated by financial gain or loyalty to a criminal group. So those were the imposter scam scenarios and how money mules are being used in the process. The final advisory we're going to go over today was issued July 30th by FinCEN, and that is advisory on crime, cybercrime and cyber-enabled crime exploiting the COVID-19 pandemic. Here, the fraudsters are targeting and exploiting of remote platforms and processes. This is because, you know, a lot of us now are working remotely from home, so this is a vulnerability that is being exploited. Migration towards remote access in the pandemic environment. Criminals exploiting financial institutions' remote systems and customer-facing processes. And they steal information, compromise financial activity, and disrupt business operations. Sorry. Stan and I were talking about, you know, what could go wrong in this time of social, you know, doing this remotely. Okay, so these are terms. This group, I'm sure, is very familiar with phishing, malware, and extortion. As it relates to the coronavirus, healthcare and pharmaceutical providers are often the target. Phishing scammers often reference COVID-19 themes, such as payments related to the CARES Act, in the subject or body of the emails. That's to grab the target's or the victim's attention. And ransomware targeting medical systems and municipalities. Business email compromise is also used, convincing companies to redirect payments to new accounts while claiming that the modification is due to pandemic-related changes in business operations. Again, I think this group is familiar with this. There's always a sense of urgency. And you know, they use the pandemic and changing information because of the pandemic related. BEC criminals use spoofed or compromised email accounts to communicate these urgent last-minute payment changes. So how to detect fraudsters at a financial institution? There's basically 3 points of contact where you know, a financial institution employee can detect these types of activities. First one is at account opening, transactional monitoring, and probably the best source would be employee referrals. So let's look at those real quick. At account opening, so this is for our frontline folks, some red flag indicators would be a new customer, a walk-in customer, no ties to the bank. That's not to suggest that this is always a red flag, but it's one of those red flags where you just need to look at the situation a little bit closer. For personal accounts, the source of funds, we ask customers to identify at account opening what their source of funds is. If their only source of funds is government aid, donation, or work from home, potentially a red flag. again, none of these are to be looked at in a vacuum. It's in relation to the entire picture. And then for a business account, a business opening an account with limited information regarding their line of business and limited knowledge of expected activity. Again, this is one of the things banks ask for business accounts. Give us your expected activity. If they can't provide that, that may be a red flag. Transactional monitoring. Most banks have an automated AML monitoring system. So some of the alerts to look at would be the cash, wire, or ACH. And you're looking for anomalies. You're looking for transactions that don't make sense with the customer's line of business or their purported occupation. And finally, employee referrals. You know, as I mentioned, that could be one of the best referral source. And I say that because at the front line, the employees witness behavior, hear comments perhaps that are made that are not evident in reviewing of transactional activity. So employee referrals could be a very valuable source. However, in order for this to be a valuable source of referrals, the employees have to have proper training. So ensure that the bank's program has a comprehensive training program with focus on BSA and these types of red flags. Again, the same red flags we mentioned: cash withdrawals, wire request, or even a cashier's check request that is out of the ordinary. And that is the frontline's responsibility, basically, is to, if there is something that doesn't seem right, refer it to BSA. And then BSA will then determine and conduct a full scope investigation and determine if there is a report of a SAR that is required. So we'll go over some, these are real life case studies. And also, when we send the link to those advisories that FinCEN sent out, they have also hyperlinks to some other case studies. So some of these are interesting to read through. These are case studies that I'm familiar with. So in this case, the customer is a business customer, longstanding with the bank, and is an ATM operating business and maintains a personal checking account. So the bank's transactional monitoring system in 1 month alerted to 2 out of the ordinary outgoing wires going to a trading company in Hong Kong. This was alerted because the customer had never sent out a wire to Hong Kong before, and a wire from a personal account, and you'll see on the screen, it was $160,000 from a personal account to a trading company in Hong Kong, is highly unusual. And in addition to that, there was $20,700 sent from the checking account to the same trading company in Hong Kong. So the Hong Kong company was researched online and was found to be a supplier of products, including caps, scarves, ear cover, and gloves. Subsequent to remitting the above wires, the customer began depositing checks made payable to the ATM operating business into the business account. However, the checks contained memo notations that read mask or N95 mask and ice. In some cases, it identified the item count. Red flag, because what is an ATM operating business doing receiving checks with a notation of masks? In addition to that, the checks were remitted by various types of businesses: dental, lead paint testing, hardware store, garden center. None of these are related to our customer's ATM operating business, and we have never seen these counterparties before. So red flags. And then based on some of the notations on the checks, it appears that each mask was sold for $2.75 a unit, although in other checks, that price point was much higher. So that's that price gouging we talked about earlier. And FinCEN's advisory that alerted financial institutions to be aware of these red flags actually identified specifically advertising the sale of highly sought after goods related to the COVID-19 pandemic in response at either deeply discounted or highly inflated prices. On a side note, when SARs are filed with these types of red flags, FinCEN does want the bank to identify the advisory and indicate that this was COVID related, because they do run some keyword searches and they can find this data quickly. So as a note, very soon after this particular SAR was filed, I would say within 30 days of that SAR being filed, and by the way, the customer is a New Jersey customer. The New York HIFCA, which is the Office of an El Dorado Financial Task Force, Homeland Security Investigations, called the bank and requested the SAR supporting documentation for this case. So that indicates that either there is an ongoing investigation or this particular SAR piqued their interest. Regardless, this was of interest to the law enforcement agency.
Mm-hmm.
Okay, so that was that one. The next one is more of a broad case, and it's the exploitation of government relief funds. This was how we saw a lot of this happening, so it's more broad. And what we found is personal accounts receiving ACH credits from the SBA Treasury 310. That's how the ACH came in. Basically, these were payments, relief payments, stimulus payments under the SBA Economic Injury Disaster Loan. So EIDL is the loan and EIDG is the grant. So grants were given which were forgivable, and then loans were also given at very low interest rates. And what we found are payments range from low thousands to hundreds of thousands of dollars. And I'll make a note that a personal account receiving this SBA payment is not in and of itself suspicious, because the individual could be a 1099 earner, a contractor, so that could be a legitimate payment. But again, personal account receiving an SBA payment, let's look into it. So when we did look into it, we found that we want to follow the money. What were those funds used for? Is it for business purpose or not? And I just want to also mention that here, the proceeds, under the government program, the proceeds can be used to cover a wide array of working capital and normal operating expenses, such as continuation of healthcare benefits, rent, utilities, and fixed debt payments. So it's pretty specific on what the purpose of these funds are to be used for. Okay, so we followed the money. And some of the things that were suspicious were checks being, shortly after the funds were deposited into the personal account, checks are issued to friends and family for round dollar amounts and made no rhyme or reason around the purpose. ATM withdrawals at casinos and card clubs, we've seen that. And the most egregious in my experience was we did see very shortly after receipt of a large loan, the purchase of a luxury car, a Lamborghini. So I would question the purpose of those uses, and do they relate to the stimulus?
Yeah.
Okay, and then the third case study is a money laundering case. Not totally related to the pandemic, but what we found and why I'm bringing it here is customers are using the pandemic to explain their transactional activity. So this customer is a produce wholesaler. The warehouse is located in San Diego, which is in close proximity to the Mexican border, and it is over 100 miles from the nearest bank branch. So red flag. Why would a business that has an operation 100 miles from a branch seek that bank to open an account? It's a small bank, relatively speaking. It's not the B of A's and larger banks. So a lot of times the illicit actors think that they can, hide their activity at small banks. And in addition, when we do ask the question, if your business is further than X miles from the nearest branch, why would this customer come here? And he said, well, it's close to my residence. And his residence was in La Jolla, which is 70 miles from the nearest branch. So it's still a red flag. At account opening, the customer indicated that they're going to expect cash deposits of about $70,000 a month. And the only source of deposit were money orders. And they explained that the reason for that is because they've had bad experience in the past with customers paying with bad checks. So they only accept cash and money orders. So, okay, that's fine. The customer almost immediately after opening the account began structuring their cash deposits. And what that means is they were depositing just below the $10,000 threshold so that the bank doesn't report them on a currency transaction report. And that is a SAR. So the bank began filing SARs, counseled the customer, indicated that, there's a CTR pamphlet that FinCEN has, and that was provided to the customer. So the structuring stopped, but there are SARs filed on this customer. Then when the pandemic hit, we found that cash deposits increased significantly. This customer went from $70,000 in cash on average per month to $300,000 in cash on average per month. So the branch questioned the customer, what was the purpose for the increase? And the customer explained that because of the demand from supermarkets, which are his clients, because of what we saw early on in the pandemic, there was a rush on grocery stores and supermarkets. This explained the reason for the cash increase, but that was a pretty significant cash increase. We looked at the money orders. They also increased to now almost $200,000 a month. So between cash and money orders, this customer was depositing almost $500,000 a month in their deposit account. The money orders, we looked at the images that were deposited. They were in sequential order, and the purchaser information was not filled out. However, they were all initialed, and it appeared to be the same purchaser. So $200,000 a month from what looked like the same individual. So when we questioned the deposits and the money orders, the customer basically just said, it's the demand out there right now, and that explains the increase. So then we followed the money and saw, these were the sources of deposits. Where were the funds going? So we saw that the funds were being issued either via domestic or international wires, as well as checks to their suppliers, both to companies in the US and in Mexico. So we did some more research and found that one of the counterparty businesses, their owners, this was a dated article from 2013, but the father and son were crossing the US-Mexico border coming into the US, and they were found to have marijuana on their possession. And during the search, law enforcement found that they had over $100,000 in cash hidden in their socks. And they claimed, oh, we were going to claim it, but we got distracted with this marijuana search. Yeah. So whether they did or were intending to or not, we don't know.
So, Susan, I must interrupt. I found $100,000 hidden in socks. Those are clearly not dollar bills. What denominations must you have to be able to fit $100,000 in your socks?
Right. I would imagine there were large bills. The article didn't say, but that's a very good point. I mean, that's a lot. It was over 100. There's an article online on this. Anyway, they were actually charged with bulk cash smuggling, but then the charges were dropped later because they determined that these were legitimate funds. Anyway, that's not our customer. That's just one of the counterparties, but it's a red flag because this is a business partner of our customers. It's someone that our customer sends money to. So anyway, during this time while we were investigating this customer, we did receive grand jury subpoenas, which to me, a grand jury subpoena is a big deal because for it to get to a grand jury subpoena, law enforcement has to have all their ducks in a row. And so there was something to it. Ultimately, the funds in the account were seized by Department of Homeland Security. The agents did come to the branch and issued a search warrant and then freeze the account, and then ultimately the funds were seized. Oops. Oh, sorry. How do I go back? Okay, sorry. So that's our third case study. It's really more of a money laundering case, but it does highlight that, you know, customers are using the pandemic for all kinds of reasons. And then finally, as promised, regulatory hot buttons. I don't see that they have changed. So from the BSA world, the regulators continue to focus on, you know, risks from traditional money laundering schemes, risk assessments, risk appetite, risk appropriate controls, due diligence, evolving vulnerabilities resulting from the rapid pace of technology, and then now as a result of the current pandemic environment, MSBs and high-risk account profiles, and emerging payment solutions and terrorist financing. Those continue to be the hot buttons for regulators. And that concludes my presentation. Any questions?
Yeah. Okay.
Thank you, Susan. That was great. So I'm just curious for the bankers here, have you had customers talk about any of these things or even become victimized by them? Susan?
I'm sorry, say that again?
I'm just curious if you've actually had customers that have been involved in, you know, unwittingly getting caught either banking transactions involved in this kind of fraud or having customers victimized by it?
We have. All those case studies were real life from the bank I used to work for. I didn't mention any names because we do have to keep them confidential, but those are actually real case studies. And the case, the second case study involving the SBA payments, that was very common. We saw a lot of that. So it was customers that were exploiting the, you know, the stimulus opportunities. And what that does, it takes away from really customers that truly need it. And then you see a customer get a grant or get a loan and then use it to buy a Lamborghini, you know, it doesn't feel good.
Yeah, I think it's going to be a massive job chasing all those situations down because I hear anecdotal stories about a lot of sketchy funds being provided to people that applied for the loans.
And the other thing is, unfortunately, some of these dollar amounts are small. So they can go undetected in a bank's monitoring system. So I'm sure there are a lot out there that just have gone undetected, which is unfortunate.
Yeah.
We've seen some variance on the number 2. I've had criminal cases where the criminals use the identities of Pasadena businesses, applied for the grants from the SBA. They also opened up bank accounts in the victim-to-be's name. They got the money, They took it from that bank account, moved it immediately to another bank account. So there it went. The victims finally found out when they started getting letters from their new bank. That's when they came to us and filed crime reports. They didn't get the money, but they're going to get the tax bill. All we could do is tell them file the affidavits with the SSA or whoever's sending the money to them and to the banks. And we have no idea who did it.
That's very true. We've seen that as well. A customer walk-in, opens an account, receives payment, wires it out, closes the account. The sole purpose was to receive payment.
Yep.
And the other point you made is, which is it's a good point, is we were receiving in our California branches, California customers, and this is unemployment, not SBA, unemployment from other states. So they open the account, receive an unemployment payment from some other state, remove the funds, close the account. But those were small dollars. This is the risk that banks may face, is there are very small dollar amounts. So typically banks' monitoring systems are geared towards picking up larger dollar amounts. So banks have to do either a keyword search on those or do a special outside of the box kind of a search. That's how we found them.
And good question from Tom. Tom, do you just want to tell the folks what your role is real quick so they know what you're doing?
That's a good question. For the past 20 years, I've been a volunteer with the Pasadena Police Department. We have a 5-person group of volunteers within the Financial Crimes Office in the Detective Squad. They call us the Identity Theft Investigators because that's what we started doing. We investigate approximately 700 cases a year of all aspects of financial crime, including identity theft. My specialty, unfortunately, is starting to be financial elder abuse and anything and everything that has to do with that stuff. The qualifications of our team is I've got a retired supervisor from the State Attorney General's office. She got bored. She's a lawyer. Certified fraud examiner, a banker retired from Bank of America after 30 years. And our new kid on the block is her hobby and graduate degrees are in cybercrime. And then me, my background also includes membership in the FBI's InfraGuard program. They've taught me a lot of cyber crime. We just love it. The bad news is due to COVID, since we're volunteers, they sent us home in November. I'm going back next week. The rest of the crew is going back after they get their second shot. But the 600 cases a year, as our chief says, that's more than some of the detective squads in the San Gabriel Valley investigate. So we're not real cops, but we do good jobs.
That's fantastic. And leveraging people that have both the inclination and the knowledge to be able to pitch in as volunteers, that is really cool.
Thank you.
Susan, just, ID theft is such a big deal. Could you just explain the regulations around ID theft and what banks are doing in terms of training employees and all that stuff? Just briefly, what are those requirements?
Sure. There are red flag indicators at account opening that banks should be on the lookout for. And it's a list of, the documents don't look right, things like that, Social Security mismatch. So that's at account opening. Banks will conduct an identity verification, identity theft, red flags analysis. Then once transactions begin to occur, the BSA department will look at transactional activity and try to match up the activity with, like I mentioned earlier, the type of business that the customer is purported to be in or their occupation. There's annual reports to the board that, would identify all the cases of identity theft that have been identified throughout the year. So there's different red flag indicators that banks need to be on the lookout for, both at account opening and then throughout the life of the account.
That's terrific. And classic, sort of after the account is open, a couple of red flags are if people request an address change and then turn around and want to do transactions or other things, within 30 days, actually, there's a kind of a moratorium on permitting certain types of activities after address changes. Or the other one is a change in phone number, which so often is used for multi-factor authentication and things like that. Critical things. Excellent. Any other questions?
So yeah, let me ask kind of a big picture. So we know all this kind of fraud is going on, and it's exploded apparently because of COVID. And we see as well unemployment fraud and the whole gamut. I guess, who knows what evil lurks in the hearts of men, to quote Shakespeare. So how challenging now is it? You're overworked, and the challenges because of working from home and so on. It's got to make it easier for the cyber criminals to be successful here. I mean, is there any sense of just how much money is going out the door that we're losing?
It is. Here's an interesting statistic that I read. Within this pandemic, now that law enforcement and FinCEN have more months under their belt to analyze, they found that banks are not the targets, whereas in the past they would be the denial of service attacks and those sorts of things. Now they're going directly to the consumer, and the consumer is the one that is being, even though it's a low dollar amount, it's the consumer that's being targeted more than the large banks now. So it is a lot more. It's a lot more work. It's smaller dollar transactions. They're a little bit harder to find, but we got to do our best.
Yeah.
And all that's occurring with a huge ramp up in regulatory oversight related to AML and, the BSA area. Susan, you massively increased the size of the BSA staff at Grandpoint, I remember at one point. Yeah. How many people did you have, and how many did you have to hire to really, feel like you had things on a solid footing?
So I'll talk about my prior bank. When I joined that bank, it's $1 billion, let's say $1.3 billion bank. They had about 18 staff. For $1.8 billion, that's a big department for BSA, huge. Mm-hmm. At the time I left, we were 25 employees in that department. So we started off with a really large department, but ended up with 25. Again, I think it's a big department, and there may be some normalizing that needs to occur. But BSA is no joke. And regulators are not letting up. I am seeing there is a little bit of a pivot to credit risk. Because of the pandemic and businesses suffering economically, the regulators have pivoted a bit to credit and are focusing a little bit more. But that doesn't mean that BSA is ever going to go away, and that's always going to be a high risk area at a bank that needs the resources.
Mm-hmm. What are the other bankers in the room, like Josh and Will? And all. What are your experiences this way?
I would say BEC incidents have remained pretty steady. It seems like check fraud's on the rise though. Whether it's people out of work or thinking that with people working remotely, they're maybe not monitoring bank accounts closely. So we've seen a pretty dramatic spike in check fraud in the last year. Mm-hmm. Now, BEC, it could be that they're asking for, changes in payment. We had a client that was a victim of BEC where the supposed vendor was requesting an ACH rather than a check. And I'm sure the story behind it was COVID and we need to get paid faster. And ultimately, they sent the money. and they didn't pick up the phone. But yeah, check fraud definitely on the rise for us.
Mm-hmm. Yeah. I mean, I look at this, and I'm not in the financial services industry. I'm in the other, I information security management services, and we see that periodically, where we'll have companies that have suffered a loss, and on our side, what we're seeing, it's in one case, frankly, it was a failure to implement multi-factor authentication on their email system, Office 365. Cybercriminal hacked into the email system, and there's a professional services firm and a partner's assistant got the email, I need you to wire $50,000, and over, and Tom shaking his head knowingly like you've seen it. Yeah, we've all seen this sort of thing. The money, $50,000, went out the door. The other, and maybe this is something that's when financial service firms, when you talk to your customers, this is a large organization, national, with really tight controls around financial transactions, whether ACH or wire or whatever. They just forgot to put controls in for when somebody changes a bank account and what routing number and account number to pay to. And sure enough, a vendor got hacked, and our client, got the email to wire money to a new bank account from who they believed was their vendor. And they did that because they didn't have controls yet in place to look for changes. So that would be a very natural place as we're advising customers, just make sure that piece of the process is nailed down as well. I mean, those are the things we're saying kind of on the outside, not inside the financial services industry.
Well, one case we had, the protocols were there, and the protocol said, when you deal with a new customer, you meet face to face. And in the early days of COVID, they says, we're just gonna have to trust you over the phone. The bottom line was a $250,000 loss.
Ouch. Whoa.
Not following protocols.
Yeah.
Any other questions?
Any others? Susan, this has been great.
Thank you.
Absolutely. Susan, thank you so much. Great to see you. We will be talking shortly, I'm sure.
Yeah.
And just want to mention before turning it over to Stan for just a final wrap up, please tell us if you have a topic or a speaker that you would like to hear. Let us know. It's really important. We'll be surveying the group hopefully in the near future to get more structured feedback. But in the meantime, go ahead and contact Stan or me and or Josh if you have any ideas. Normally we had a thing up front that had Josh and mine's email address and stuff. Anyway, great job, Susan. Thank you so much.
Yeah.
Thank you. My pleasure.
With that, I'll turn it over to you, Stan.
Super. Well, thank you. Thanks, John. Again, yeah, Susan, I agree with what John just said. This was super. Just really, really valuable, good overview and all. So I want to, first, I just shared my screen. This is a new Secure the Village website. But beyond that, let me just resize my window. John mentioned earlier how old this group is. So it gave me the motivation to look it up in my calendar. We had a meeting 8 years ago this week, February 22nd, 2013 was our first meeting. It was at Bottega Louie, downtown LA.
Right.
Way too noisy. we only met there once because you couldn't hear anybody. But Laura Martin, she and I met, if you know Laura, she was at California United at the time, and kicked around this idea, why don't we get some people and go have breakfast together? And Josh, you were there.
Mm-hmm.
John, you were. Barbara Watkins was there. Lara Divi, I haven't seen her in years, was also there. Russell's son, who sadly has passed away since then, was here. But it was a small group 8 years ago. and here we still are, kind of moving forward with how do we get the collaboration going? And we've been through a lot these 8 years, all of it in person, and up until COVID hit, and now we're national, soon to be international, which goes to, if you know people in financial services, any area in the financial services industry, anywhere around the country, and invite them to this. I'm showing you, this is our new website, and we're really proud about this because it's not only a great website, we think, but it also sets up our growth for the future, which is where we're in right now. You come to the website, 3 main things to do. You can attend, that's events like this. Learn, we have a whole library, and we're building the library, and please send us references so that we can get them into the library. In fact, I'm going to put a link in the, let me do that. Let me put a link into the chat box where you can submit a resource for the library. Let me just find the chat box back. This is one thing I don't like about Zoom, which is that when you go to share your screen, everything else moves around. So it's that harder to find it. But here's a link. I just put it. So if you've got any resources, please just, that's a form that you get to fill out with the appropriate information, and just, like copy and paste the link and so on. And then we can just upload it into the database, so that what you get, if you go to the library, and it's been a little slow. Turns out WP Engine, our hosting company, is in Texas. And so they've been really challenged with the weather in Texas. But here's the library. You can look for things, articles and videos and events down the left-hand side. You can focus on financial services. So if you click financial cybersecurity, up comes a filter of those things that are in the library that have to do with financial services. And so it's designed to be easy to use that way. The same with our events calendar. Here's today's event. And next month, we'll have this next month's event, and so on. And then we get the Village Square, which is, these are all the people in the companies that are part of us. So right away, all of you are cyber leaders. So submit an application, if you will. I'll put that in the chat box as well. It's also on the website. To be a cyber leader will get you included on here. BTI Growth Advisors that you're looking at right here, they're going to be a sponsor of this group of the Financial Services Resource, Financial Services Cybersecurity Roundtable. They're going to be our sponsor starting next month as well. So we're beginning, now that we got the website out, how do we raise money to keep this going? That's part of what our vision is. A whole set of papers on who we are, what we're about Secure the Village, our spirit, this whole idea that it takes a village to secure the village, and what that means, and where our roots are. One of those places that I see, and we've talked about on the board, and by the way, John and Josh are both on the board of Secure the Village as well. One of the things we've talked about, and we've got an active group working on it, is on the one side, workforce development. We're short a couple of 100,000 people in the field. So we've got a group that meets monthly, proactively looking what we can do to provide leadership and support in that area. But when we do that, and this goes to the spirit of Secure the Village, we can bring in people as apprentices and entry-level jobs in cybersecurity, that they require a good attitude, and they require a certain skill base, but they don't require 4 years of college and 5 years of security and all the other things that HR departments are often asking for. And we see it as a way both of providing good careers for people in marginalized communities all around America, whether we're talking you know, like here in Los Angeles and some of the poorer sections of LA, or like I grew up in Western Pennsylvania, where the economy has been hollowed out as oil and energy and steel production and all have left those areas. Cybersecurity becomes good jobs for those people. And I think about this directly with respect to the insurrection in Washington, that right in the area I grew up in, and I used to drive through this little town called Sandy Lake, Pennsylvania, and a woman's been arrested in Sandy Lake for being one of the leaders of the insurrection. And you look at that area, and economic development has shrunk to zero, and that's breeding grounds for insurrection that way. So I kind of feel that Secure the Village and our whole field is poised to help truly make a difference in America. And that goes to the spirit of what we're all about as well. As I talk about in my book, it's not about being right or left, or Republican or Democrat, or red or blue, or pro this or pro that, or anti this or anti that. It's about how do we work together, you know, creatively to do things. And that's part of what we're about with Secure the Village. So please get involved as you see, and basically come play with us. Do good and have fun, and, you know, help the world that way. So that's Secure the Village. A little bit about us. We've got 6 current programs that we're running. This one, of course, runs on the 3rd Friday of every month from 8:30 to 10. But we've got a security and privacy working group that meets from 12:30 to 2 on the 2nd Tuesday. A Monday security leadership happy hour that meets on the 3rd Monday from 4 to 5:30. Those are both very generic in terms of what they do. No specific agenda yet. That's still, I think that'll evolve as we continue to meet with that group. We do have the cybersecurity workforce working group, and that's very focused. I'm just blown away by the talent that comes to that meeting. This group, of course, all around the financial services. How do we all do a better job of helping our banks and helping our bank customers, and correspondingly helping the economy that way? If you're on the technology side, we've got technology and cybersecurity. Oops, that's not what I wanted to do. The happy hour. Our meetings that go end of day. This is 4 to 5:30 on the 4th Tuesday of the month. We call them happy hours. Join with a glass of wine, or, you know, this is California with whatever else you might want to join with, you know. But that one's focused on technology and security management. So it's right on the intersection of IT and security. We've got our next meeting Tuesday is on a really nifty new technology for configuring workstations in a big, large network, and then managing those workstations and updates and, you know, all the technical stuff that has to go on. And then periodically, we've got a cybersecurity for residents group. It meets, we had a talk on disinformation a while ago, talk on bullying, teenage bullying, and how to avoid that. And one of our other board members, who's very active on the resident side, he has a book called Cyber Guardian, a Secure the Village guide for residents. And we're turning that into a Secure the Village app that'll run on your iPhone and Android. We hope to be live with that in the next few weeks, actually. So there's a lot of stuff that we're doing. On the other side, please, if you haven't done it already, put your name and email address into the chat box. Add Troika if you want to be get together collectively with some of us later, between meetings. Please do that. Sign up on the Secure the Village website as a cyber leader. If your company's in security, sign up as a cyber partner. If you're doing events, alert us to them, post things to your library, introduce us to other of your colleagues in cybersecurity, and follow us on LinkedIn. Share us with your connections. I've got one of the things I do every day around 11 o'clock is I'll log into our Secure the Village website, our LinkedIn page, and I'll forward whatever the link of the message of the day is out to my contacts. And if all of you do that, we grow the whole organization that way. So it's a good thing to do as well. This is something that it says something to me about our responsibility and our opportunity at this point in time in history. We know cybersecurity, cyber privacy, these issues are, they're not COVID, and they're not getting out from under that, but we know that the Biden administration, as soon as we clear off things like that, he's got to turn his attention to cybersecurity, cyber privacy, whether it's solar winds and all the implications of that, or it's the surveillance economy, the Facebooks, and how do we maintain our privacy? How do we integrate the California Consumer Privacy Act with other states doing the same thing? We got to pay attention to security. And I think we all know that, not just those like us that are somewhat in the field. We're going to get an opportunity like we haven't seen, I don't think, since I was a child. And the Russians launched Sputnik, which drove America into action. And 13 years later, we landed a man on the moon. I mean, we're kind of about to hit that kind of a pace again, but this now around security and privacy. We have an opportunity to make the future the achievement that Bobby Kennedy talked about. So, and I'm very grateful for all of the people who are in the village helping us do our share in that. And, I'm very proud of what we're doing and looking forward to what else we're going to do here. So that's kind of a overview of Secure the Village, if you will, and some of the things we can do together to truly make a difference. So I'm going to stop there, turn it back to you, John, and you can take us on home.
Okay, great. Well, I think we've certainly served up a lot of information, so we can go ahead and end the meeting. Just one last thing. If you are credentialed, check your continuing ed requirements. I know I'm a CISM, Certified Information Security Manager. These meetings count as continuing ed credits. So, there will be a link to this presentation online, and you have a copy of the email invitation and link and whatnot. So those are documents that you should retain if you do have continuing ed documentation needs. That is it. Great to see you all. And next month, it's the third Friday of every month, 8:30 a.m. Check online, check your emails, and please register. Thank you all. Take care.
Thank you. Have a good one.
Thanks.
Thank you, everybody.
Bye.
Presentation.